Welcome to our Samvat special State of the Economy. The new year, Samvat 2079, is set to start shortly in a few days. And today I have with me 4 economists to tell us how they see the economy and its macro parameters and hence its policy priorities in Samvat 2080. So we will be discussing October of 2080 as well. I have with me Dr. Ashima Goyal, professor at the IGIDR and member of the Monetary Policy Committee, Yamini Aiyar, president and CEO of the Center for Policy Research, Pranjul Bhandari, economist at HSBC India, and Upasana Chachra, economist at Morgan Stanley, India. Ashima, let me start with you first. Your MPC minutes were somewhat subdued. You were afraid of the dangers to growth. The RBI, the only official forecast we have is RBI's, which is 6.5%. I can tell you that a dipstick poll I did said that growth next year will not even be 6. I got an average of 5.7. But your thoughts, how worried are you about economic growth next year?
I believe that India has space for smoothing external shocks, policy space. And if we do that correctly, then we have a chance of we've been looking for catch-up growth for transitioning to at least a middle-level economy. And that requires both monetary, fiscal policy as well as structural reforms. And, in the era where we've entered, the liberalization era, unfortunately, it's been one, there have been a series of global shocks. And for emerging markets as a whole, it led to very high asset price volatility, stock markets, exchange rates, interest rates, and that impacted growth. But I think now we have learned and we have the policy space. So I always say that we must make sure that real interest rates do not become too high or too low, and that the real exchange rate stays around competitive levels. So that means not too much nominal depreciation. And I think I would like to flag this issue because there's a lot of fear about exchange rate depreciation related to the current account deficit and the drawdown of reserves. A lot of the reserves have decreased because of valuation effects, not because of they've been used up, really. And we have a very large amount. So markets have some confidence in the Indian economy today. They recognize the long-term growth prospects and the policy space. So that's why we've seen that even though the US tightening is going to continue, we are seeing inflows coming back. We are seeing that the depreciation of the Indian rupee and the fall in Indian stock markets has been very low compared to other countries, advanced economies as well as emerging markets. So I think we have a chance if we do the right thing to have good growth.
Yamini, on that point to you, there would be a body of economists who will say that this year we have been able to get a 7% growth because we have a 10% general fiscal deficit, 6.4 center and, about 3.5 states. Next year, okay, we may not be as brutally punished as the United Kingdom, but we can't go more than 6.4. Next year, you will have to admit that the fiscal deficit has to be lower than the current year. And you could have the world not giving us too many orders. So do you think there will be fiscal space to, transfer resources to the bottom of the pyramid, to do the rural slowdown, which is very much staring at us? Do you think the fisc will have the space to rectify that?
Thanks, Lalita. I'm actually not as sanguine about the state of the rural economy. I think that the degrees of distress are significant and they're showing up. They're showing up primarily in the fact that rural wage growth has been pretty much stagnant consistently for since 2014-15 onwards in real terms. And in some months we've also seen degrowth, including this fiscal. Actually, this year starting from January. But the bigger challenge is coming from where our agricultural stocks, a combination of the global context as well as the climate hits means that for the first time in nearly 5 years, stocks of wheat and rice are significantly low. Cereal inflation is at an 11.5% high. So, how do we balance all of this out? The government has certainly taken a call to extend the public distribution system. But given where we are in terms of stocks of wheat, and it doesn't look like with the unseasonal rains that we've experienced that paddy harvest is going to be all that robust either, procurement will be low. All of this now needs to be taken into, factored into our calculations against a backdrop, as you rightly say, of relatively tight fiscal space. And let's also not forget that even though we did some bare minimal food security NREGA for the rural economy in the peak of the COVID crisis, surveys after surveys are showing that rural incomes have suffered. The latest survey coming out by the Azim Premji Foundation, Azim Premji University just this week for NREGA workers found that incomes dropped anywhere between 30% to 50% amongst NREGA worker households, which is an indication of how much stress there is in the rural economy. So where do we go from here against a backdrop of limited space to fiscal space, to your core question? I think perhaps we will need to recalibrate a little bit of how what is the nature of fiscal support we are giving to the rural economy. Right now, a large part of it had been focused on the public distribution system. Perhaps we need to recalibrate a little bit more and bring together some of the capex investment and NREGA in a little more sync. I would focus a lot more on operation maintenance and rural asset creation, PMGSY, to infuse a fiscal stimulus into the rural economy immediately. Income generation of this nature. It both creates assets in the long run, as well as ensures that there's cash in hand, which will hopefully stimulate the rural economy a little bit more.
Okay. Got that.
Yeah. On stock.
Yeah, coming back to Yamini, but I got that point that the capex should be spent in such a way that Pradhan Mantri Gram Sadak Yojana or projects which also put more purchasing power into rural India. Pranjul, the stock market wisdom has been that global economy is not doing as well as India. So don't look at IT stocks or stocks which are global facing. Look at domestic facing stocks like banks, economy facing. Can you just explain to us what will be the conduit if the recession picks in? How does it enter? Is it only this 20% of exports? Exports are 20% of India's GDP. Is it only that part which is affected, or can it also affect domestic-facing economies?
Well, actually, I think the importance of exports in India's growth is far more than people tend to acknowledge. Just think about India's growth after the pandemic. If you look at growth between June 2019 and June 2022, GDP growth has grown only 4% in real terms, while exports have grown 20% in real terms. So exports have been a huge driver of growth. And within that, particularly high-tech exports, your IT services, your mobile handsets, drugs and pharma, specialized machinery have actually gained market share globally in the last couple of years. Since about August, we are seeing some of these high-tech export volumes begin to fall. And my worry is that the growth impact from that is going to be large, just because exports was such a large contributor to India's GDP growth. That's one sort of a channel. I think the other channel is inflows. The fact that global liquidity is much tighter right now than before. We really benefited from very strong liquidity. We've attracted $100 billion in our startups in the last 5 years, but that is likely to slow. It's already slowed since the start of the year. It slowed 40%. And I think that is going to be another problem, we'll have to deal with in terms of both growth and also funding the current account deficit. So there are various channels in which the global economy will impact the Indian economy.
On that point, Upasana, what's the Morgan Stanley worldview? Are you all expecting a very serious slowdown in US and developed markets and the world in general? And therefore, what's your India growth forecast for FY24?
Hi. Yes. So our view or our global team's view on global growth next year is one of pretty subpar and slowing growth as we enter into the next year. We don't have US entering into a recession, but it is sort of recession-like growth with growth at about 0.5% into next year and euro area into in a recession as we forecasted as of now. So it is a challenging external environment, definitely with slowing growth, which will impact exports, as Pranjul highlighted. 20% of GDP comes from exports. There will be not only the export channel, but yes, to the extent that it has spillovers on global financial conditions or global capital market flows, that tends to impact India on the deficit financing side. But what I'll highlight on our view on India's GDP growth and what we expect how India will do in the next year is that I think we need to see how India's growth trajectory moves after this pandemic-led disruptions that we've seen in the last almost 3 years now, and where does India's growth settle? Does it settle in the 6 or 6% above handle or below that? We are constructive. We think that India's growth will settle around the 6% and above handle. Our fiscal 24 forecast is at 6.2%. We think the cycle is different. Domestic demand is on a very strong footing. So while 20% of it is exports and it will be seeing weakness as obviously we enter into a slowing phase next year, there will be offset that can be provided from this very resilient domestic demand. And we think that will help to sort of give a stronger foundation to growth over the medium term.
Okay, that's a nice way to end the first segment of our discussion. 6.2% growth. I can tell you, Upasana, you have only RBI for company. My set of 10 economists I polled gave me an average of 5.7. But do stay on, ladies. The inflation question that Dr. Ashima Goyal raised, as well as the rupee and the current account deficit, how serious will be those problems in the coming Samvat? Those questions after the break.
पंजाब एंड सिंध बैंक की तरफ से
Welcome back to our Samvat special State of the Economy. I have been speaking with Dr. Ashima Goyal, Yamini Aiyar, Pranjul Bhandari and Upasana Chachra. Ladies, thank you very much for your patience. Dr. Goyal, to you, the MPC's given mandate is inflation, and one can see that concentration of the external members of the MPC on their inflation mandate. But, the recent events in the UK and before that show us that financial instability can come in various ways. And the Bank of England had to change its monetary policy track and, step in to provide stability. Do you think that there will be those contexts as well, that the Reserve Bank will be forced to use the monetary policy Brahmastra for external stability?
I think that in India, we've gone through periods of very large surplus liquidity and a period of extreme liquidity tightening prior to that, with the NBFC crisis and so on. And we've seen that there are financial stability issues in both. So, my stance, for example, it is about maintaining adequate liquidity. So once you do that, I think this QT as a whole, as long as it progresses very slowly and specific frictions in the financial sector are taken care of, that is the best way to minimize possible crises. But, the other risks facing India, from where are these crises going to materialize? Because our financial sector is somewhat robust. It's just been through a deleveraging, capital adequacy is good. We don't have as much growth of shadow banks. Our shadow bank sector tends to be much more tightly regulated than it is outside, where all the regulation focused in advanced economies, where all the regulation focused on banks. So the crises are erupting in the shadow bank sector. So even though overall there is QT and inflows recede, I think India will attract a larger share of inflows. Yeah, so those risks are somewhat moderate. And India being a diverse country, we've always followed a sort of middling through policy approach. And I think that is what is required under today's risks. So we start with decreasing demand somewhat, keeping real rates positive, and letting some adjustment come from the exchange rate, some from financing, some from encouraging exports, some from moderating imports, and then you will do much better. Instead of, I think other countries should take this lesson also.
No, I take your point. I take your point. We've handled this very well. But Pranjul, how seriously are you looking at the balance of payments problem? If our exports are slowing before our imports slow, because of the nature of our imports. I mean, they're more indispensable, they're crude and such type. Do you think there's going to be, if you were to tell our viewers how the rupee is going to perform in the coming year, give them an idea. That's very stock market important.
Right. Thanks, Lata. Our current account deficit is likely to be around 5% of GDP in the September quarter. The sustainable levels are about 2.5% of GDP. So I think there's a challenge right now to halve the current account deficit in order to maintain macro stability in the economy. And I think that should be the focus at this point. Now, why has the current account deficit, widened so much? There's an external angle for sure, but there's also a domestic angle, which is that savings have really fallen. The fact that, government saving is high right now, the fact that once the lockdowns ended, households began to start spending and all that money kept in banks has begun to fall. The deposit upon GDP, number has been falling over the last couple of quarters. And basically savings are actually in a way much weaker today than they were at pre-pandemic levels. I think that is at the heart of the current account deficit rising. What do? I think a two-pronged strategy of raising rates and letting the rupee depreciate will really help here. When we raise rates, it incentivizes savings. When we depreciate the rupee, it disincentivizes sort of import spending.
Pranjul, I get the overall point, and I'm sorry to hurry you because we have a time limit on the show. But what's your rupee range at all? Do you think it goes to 83 and beyond in the coming Samvat?
And I think this is a good thing, as in this kind of depreciation is good for also keeping your exports competitive.
Upasana, both those numbers to you, I couldn't do justice to the inflation argument, but what do you see as the peak rate for repo, and what do you see as the peak rate for the currency exchange rate in Samvat's 2017 and 80?
Sure. So our view has been that terminal repo rate peaks at around 6.5%. Bulk of the tightening is behind us. So we expect another 2 rate hikes in December and Feb, and closing the peak rate at 6.5%, and thereafter a long pause. In terms of why we think peak at 6.5%, just very briefly, we think that inflation would be close to 5.5% by the second half of next year, and so we are working with a positive real rate of about 1% over this cycle, which we think will be appropriate for growth and inflation and managing the macro stability. On rupee, yes, it is going to be tightly linked to dollar. Our global team expects dollar to peak in this quarter, but thereafter to remain a bit muddled through. So for dollar to peak, you need 2 things. One is the Fed hawkishness peaks, which probably happens in the near term, and also the rest of the world to improve, which is where the doubt is, given what we are seeing in Euro area and China. So I think that is where the dollar call becomes a little muddled through, and we therefore expect rupee to depreciate to around 83.5 in this quarter. But as the team expects dollar to gain some to weaken, the rupee would gain somewhat in the next year.
Okay, so 83.5, and Pranjul, of course, going up to 84.5. Ashima was listening to your repo rate forecast with an absolute deadpan face. No expression. She's just not betraying anything. Yamini, actually, I have a big question, and I'm short on time. We are living in a geopolitically charged up atmosphere. Xi Jinping saying that, force on Taiwan is not ruled out. So defense could take a large part of the budget, or a slightly large part of the budget, you think? That's one question very quickly. And the second question, we are very clearly back into industrial policy 2.0. Everywhere governments, the US government is driving manufacture of semiconductors. We are doing a PLI. Indonesia is doing something like a PLI. So, just some broad parameters on what the government should keep in mind as we get into industrial policy mode. How should they encourage? Is PLI a good idea?
Well,
Sorry.
big questions, short timing.
Yeah.
So let me say very quickly, I think there's no question that defense spending is going to put new pressures on how we balance our books. And this has been an ongoing challenge with the OROP, the whole issue of defense pensions, and we saw some tensions and contestations when the Agnipath scheme was announced. The 15th Finance Commission has articulated some possibilities, including types of asset monetization as ways to create a fund for defense expenditures. Perhaps it's time to look for the defense authorities to look at this a little bit more carefully and see how to balance, because of all the factors you are raising, including the fact that governments are now across the globe, and with climate pressures in India too, along with the need for addressing manufacturing and jobs, beginning to drive and subsidize a lot more of industrial policy.
Sure.
I will just say on this, you can't have an industrial policy without a proper, articulated, whole of government planned approach. We've given up on planning. I'm not asking for going back to centralized planning. We have goals like 5 trillion economy, but we don't have frameworks to articulate ways forward. I think a whole of government approach to build that is absolutely necessary. Perhaps Niti Aayog can take the lead, but without that, we will only see piecemeal attempts at addressing the very real challenges that the Indian economy confronts, and fiscal questions will not be addressed without a good midterm fiscal framework. No midterm fiscal framework will exist without a broad strategy and plan for how we intend to achieve 5 trillion. So Government of India needs to do a lot of serious planning along with year-on-year budgeting and balancing of books. It's a big challenge, but one that the government should take on head on.
I challenged you with a very big question and very little time, but you've done more than justice to it. Thank you very much, Yamini, Ashima Goyal, Upasana and Pranjul Bhandari, for enlightening us as to what we may expect in terms of Samvat 2079-80. Have a great one, all of you.